What's going on, YouTube? It's Average Joe. Just figured I'd talk to you a little bit about dividends today and why they're so important. Now, you see here, I have Facebook, Snapchat, and Netflix. All three don't offer dividends. They are growth stocks. If you look at Netflix here, I've actually done pretty well. I'm up almost $25 a share, which is fantastic. But if you go ahead and look at a similar price, look at Apple for a sec. Apple, the returns aren't as good. But Apple is a more stable company and offers dividends. So Apple will be more resistant to a recession or a downturn, and I can still make money through their dividends. With Netflix, in order to get this money, I have to sell. And with long-term investing, I don't want to sell. I want to hold my positions as long as possible. So I can hold Apple. If it goes down below what I paid for it, I buy another share. It brings down my average cost, and by bringing down my average cost, it increases my dividend yield. And by doing this, I'm able to hold the stock while still receiving money to invest either back into Apple or into another position that I like. And this is one of the benefits of dividends, on top of the tax ramifications. With Netflix, if I was to sell it, the money I make would fall into capital gains taxing, which is pretty much the same as your income tax. So I would probably lose about 50% of that $100 to capital gains. Whereas Apple, I'm not going to sell it, and the dividends are taxed at about 15% for my tax bracket. So not only do I have the benefit of holding on to it, gaining the growth that I've already gotten, on top of the dividends, I'm also taxed at a much lower rate. And all in all, it's much better to invest into a dividend stock to pretty much be able to build your portfolio. Now, if you take a look, I only own 3 growth stocks. I only own 1 share of Facebook. I don't think anything's going to happen to Facebook. Snapchat is kind of speculative because, I believe in Snapchat. I think I don't believe what analysts say. I think eventually it could become, it's not going to become Facebook, but it could become a formidable foe in the social media game. And Netflix, I don't know a single person that doesn't have a Netflix account, and that's why I believe in Netflix. But they could potentially be hurt by a downturn, whereas if we scroll down to dividend stocks, where you have Apple, Pfizer, Verizon, GE, Con Ed, AT&T, Johnson & Johnson, just naming a couple. And you see here, these are all dividend stocks where I believe none of these will really be crazy affected by any downturn in the market. And I have no problem holding them through if any recession or anything like that happens. I'm never going to sell my shares of Con Edison. Con Edison's one of my favorite companies. And to be honest, I would like a little bit of a dip, just so I can, just allocate a little bit more capital here without bringing up my average cost. And pretty much through, by going with this strategy of using the dividends, not only are you benefiting from not giving your money to the government, but you also are able to withdraw. They're giving you some of the money, and you can allocate that otherwhere or back into the original stock to receive more dividends. And that's why it's a little bit better to have majority dividend stocks with a little bit of growth. You need a little bit of growth in your portfolio, otherwise it's going to be a little too lopsided. You need something to boost that overall gains. And that's going to do it for us today. All right, please like, share, and subscribe. Leave a comment. You guys want to see anything special? You want me to explain any videos, explain why I own a particular stock? Just let me know in the comment section, and I'll definitely get to that.